Please remember that futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I author in my weekly written reports. Prices shown on charts and quote bars are in real time and take into account all known activity up to this point in time. If you'd like to read more of this disclaimer, simply hit the pause key on your computer screen. Welcome, traders. I'm Boyd Baker, and thanks for tuning in to my futures and options update. Today is Thursday, October 15th at about 2:30 p.m. Let's get right into the markets because there's a lot to talk about here today. We're going to cover about 5 different markets. There's a lot that's transpiring in the commodity complex, and a lot of this is being driven not only by the dollar, but really about Fed policy. What we had here last month is a FOMC meeting, which you heard that they did not raise interest rates. The talk on the street was that they might raise them. With weak economic data coming out, particularly in the jobs data report, weak PPI data, the likelihood of a Fed rate hike here in October is very unlikely. Certainly been pushed further and further away. Talk is maybe December. Right now, I wouldn't be surprised that they push this rate hike all the way into the spring of 2016, particularly if we have continued weak economic data. What we're seeing here is this decline in the dollar index. It was up at parity. Right now, you're pushing down into 94 cents. And with this weak dollar, or particularly weaker dollar over the past month or so, we're seeing a lot of commodities put in what I think are near-term bottoms. As the dollar goes down, our goods, our commodities become more attractive on a worldwide basis. So we've seen some of the markets, like the metal markets, many of the soft markets. A lot of these commodities may have put in a near-term bottom. And again, this is partly being driven by a weaker dollar and the U.S. not raising interest rates at least anytime soon. Gold market has made a real nice move here. You've taken a market which was trading this summer down below 1,100. It was down at 1080, and here today all the way up to 1186. So over $100 rally in gold since this summer. So the market looks like it could possibly run into some overhead resistance just based on this trend line up around 1,200. But if you've been involved in the gold market, you know this has been a pretty good ride. Another market, which I think is just getting going here based on this formation, is the silver market. A lot of people are calling the office saying, Boyd, what do you think about silver? Well, let's see what the chart has to say. As I see it, you have really nice head and shoulders bottom here at 1450 down to 1400 and a breakout of this neckline right at about 1550. Now, based on measuring studies on head and shoulders, if you've got basically a move from 1400 to this 1550, it wouldn't be unlikely that you could put on another $1.50 from this breakout of this neckline, which could take this market back up into this $17 area. Again, that's just a study based on a formation and a breakout of this neckline of 1550. So the silver market, in my opinion, just getting going. Again, a lot of this related to what's going on with the dollar. Some other commodities which are being affected, and not so much just because of the dollar. There's some other things on a worldwide basis that are going. We put forth on my written updates some recommendations in other markets. If you'd like copies of that, by all means, call me here at the end of this. I'll be happy to get you signed up on my report. But we're talking about the soybean oil market here, and this is a market which certainly has come all the way from 35 cents here at the beginning of the year to a low down here about 26 cents. And right now, it looks like this, just based on a retracement area back up into the 31 to 32 cent area, could become likely here in the soybean oil. Now, there's other factors. That's the technical projections just based on Fibonacci retracements. But this is an El Nino-driven market. If you have soybean oil, which is competing with palm oil, soybean oil demand could go up if palm oil production is adversely affected because of the El Nino. Palm oil, of course, being produced in the Pacific Rim countries, and very warm there, a lot of fires. If that production goes down, you could see soybean oil prices start to go up. Another market which is being affected by this El Nino is the sugar market. Now, you can go back on my last YouTube video that we put forth about a month ago. We were talking about a formation in sugar. Now, the sugar market had been in a 4 or 5 year bear market. And you can go back on this when we talked about the potential head and shoulders bottom that we saw here down into this 10 and 11 cent area and a breakout of this neckline. Now, it did come back down and re-challenge us, but it didn't make any new lows, and off to the races. Sugar's gone, And I think on that video we talked that potentially it could challenge 15 cents. Not that far away. You're well into the 14s. This has been a significant move in sugar. Congratulations to those who got involved on that. If you did, again, if you'd like to have written updates sent out to you, be happy to get you signed up on this. All you need to do is call me here at 866-973-2079. That way I can get you out specific recommendations. We also have a free options guide there for you, so if you'd like to learn more about trading options, please give me a call. I'd be happy to help you out.